Well, good day, subscribers. Hope you guys are having a great day out there. As always, if you're new here, I am Jeremy, and today I'm going to do a video that I haven't done in about 2 or 3 months on the channel where I publicly disclose exactly what stocks I own in the public account along with cost basis. I show everything. Last time I did this was like 2 or 3 months ago when we had about $265,000 in the account. So I hope you guys enjoy this video here today. We're going to look at everything, every single stock I own in that account, which it's like 10 or 12 stocks. And we're also going to look at how much I'm up or down in these positions, cost basis, everything fully disclosed. So I hope you guys enjoy this. Make sure you smash the thumbs up button. That lets me know that you guys enjoy a video like this, okay? And leave me a comment down there if you have some great stocks that are doing phenomenal for you that you think I should look into, okay? Let me know in the comment section, okay? Now, before we get into all these different stocks and the cost basis and whatnot, I just want to cover a few things, especially for some of the people that don't watch my channel on a super regular basis, which is like half the audience like watches every single video I put out and about half the audience watches sometimes. Let me just address a few things, okay? So the first question I get a lot is like, what do I do with the stock gains? What do I do with the dividends, okay? For my loyal viewers, let me know in the comment section. You guys already know what I do. I reinvest every single penny back into stocks, okay? I don't like sell out of a stock for a gain. I don't like get dividend money and like pull it out and like go buy stuff with it or something like that, okay? I like how I live life is from like the YouTube income, and this is like my job, making YouTube videos, right? And even when I didn't do YouTube, like back when I was working as a manager at Quick Trip or back when I had my real estate marketing company, I tried to never take money out of stock market accounts to go buy stuff. I just reinvest that money. We build bigger, we build bigger, we build bigger, okay? I think this account can get to over $500,000 within the next 2 years. And I think within 5 years, we can get this account to be a 7-figure account, meaning over $1 million, okay? And you don't get to those type of numbers if you're taking money out all the time. Like all we do is we reinvest the money, okay? The plan is growth, 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 okay? Now, a few other people ask, well, what kind of investor are you exactly? Are you a growth investor? Are you a value investor? Are you a dividend investor, okay? And so my view on this is I believe in the future, the best investors in the world will be able to do all three of these things and do them on a phenomenal level, okay? So I'm trying to prep myself. I've been in the stock market for over 10 years now, and I'm trying to prep myself to be the best investor possible. And what I've noticed over the past 10 years, what I've noticed is there are certain opportunities you get in the market where one of these categories can get unbelievably undervalued, and sometimes some of these categories can get unbelievably overvalued. So if you only do one, let's say you only do growth investing, okay? You're only looking for growth stocks, you're only looking for stocks growing 20% plus, right? There are some times, especially when the market sells off, where those type of stocks get hit in a major way, okay? And sometimes that presents an unbelievable opportunity. But also when the market gets too euphoric, guess what? Growth stocks, their valuations go through the moon and they present opportunities that aren't there anymore. You're just buying into stocks that are super overvalued, okay? If you're just value investing, sometimes value stocks are way overvalued. Their PEs are way too high for the type of growth they have. And other times, everybody forgets about value stocks and they get way too low. Same thing with dividend stocks. There are some times where dividend yields are way too low. And if you want to find a high yielding dividend stock, you need to look through like very speculative type dividend stocks. And there are other times when everybody forgets about dividend stocks, usually when the market's too euphoric and those dividend yields climb, and you can get some great stocks for very undervalued prices, okay? So when we go through these stocks, some of these are dividend stocks, some of these are growth stocks, some of these stocks are growing their businesses 20% plus, and some of these stocks might not be growing right now 20% plus, but over the next few years, because of certain opportunities, they will be growing 20% plus. And some of these stocks don't have much growth at all. They're just strictly value plays on companies I believe are undervalued, okay? So I try to combine all these. It's kind of like being a boxer, right? You could have a really strong punch like Mike Tyson, but guess what? Mike Tyson got knocked out plenty of times throughout his career because he had some lapses in defense, right? You want to be the best boxer possible. You need to be well-rounded. You need to be able to do everything. And if I look at stock market investing, if you want to be a truly great investor, like one of the best, if you can combine all these together, man, it like means the world, okay? So once again, hope you guys enjoy this. Today's video is sponsored by my private stock market membership group. That is going to be linked down there in the description. I'm not going to tell you why you should join that group. Just click the link down there in the description. The sales page will tell you everything you could possibly ever know. And if you ever have any other questions, questions, just DM me on my Instagram. But one of the most common questions we get is that group for people that are like newer to the stock market or people that have a lot of money in the stock market, have been in the stock market? And it's truly both. I have like a screenshots tab basically on there, and it's crazy because we have such diversity in that group. We have people that are just investing their first $1,000 in that group in the Discord chat. We have people that literally have, like a guy last night, he posted his account. He's got $1.2 million in the market, and he's got $990,000 of cash sitting on the sideline, okay? So needless to say, we have other people in there that have sold businesses for $7 million, $10 million. Like we have everybody, like from people that are just getting their first $1,000 to $10,000 invested to people that literally have millions of dollars in the market and everything in between, guys. So with that being said, let's start getting into this, guys, okay? First stock up here of the bunch is good old Baba, Alibaba, okay? One of the biggest Chinese companies in the world, one of the biggest companies in the world, period. You know, I love them for not just being an e-commerce play in China, in Asia in general, and also the expanding world, but I also think their cloud business could be probably their biggest business long term. If I look at what Amazon's been able to do over time, Alibaba, I think, is going right that route. I think it will probably be the number 2 or number 3 biggest player in cloud long term, okay? So we are up $2,741 on our Alibaba shares right now. We're up 12.34%. We own 140 Alibaba shares, current value of just under $25,000, $24,953 is what those shares are worth. And our cost basis, what we paid overall for those shares, are $158.66. So Alibaba's off to a good start for us. That's a long-term play there. Not a stock I'm planning on selling anytime soon. A type of company I feel very comfortable with. It's actually my only direct Chinese investment, okay? I own another stock you're going to see in this account that gets a lot of their business from China, and actually a lot of these stocks in here get business from China, but no other direct Chinese investments other than that one right there, okay? Stock number 2 up here is a stock I call Cruisy Doozy, okay? Cirrus Logic, ticker symbol CRUS. This stock is doing unbelievably well for us, especially when you consider the trade war going on and the negativity around the semiconductor industry. Like, we've just been, blessed to do amazing with this stock. So we are up $15,190.37 on this stock to be exact. We're up just under 42% on these shares. Current value in this one is $51,423. We own 915 shares here. Cost basis is $39.60 there. Cirrus Logic, unbelievable opportunity in front of that company for more and more customers when it comes to voice chips and expanding into their current customers, Apple, Samsung. You look at a lot of the teardowns of some of the biggest phone companies in the world, you're gonna find a lot of Cirrus Logic chips in there, okay? And they got a ton of expanding opportunities. Third stock up here is good old Elf on a Shelf, okay? Elf on a Shelf, ticker symbol ELF. If you don't know what they do, they're basically a makeup company, okay? Beauty company. That's what they sell. And their business model is a lot different than a lot of other companies, where a lot of other cosmetics companies, they try to create really expensive products. Elf's creating a lot of products that are in the $3 to like $15 price points, okay? So they're basically anybody can be an Elf customer if you're buying makeup. We are up over $10,925 on Elf shares right now, and we've already cashed in 5 figures plus of profits on Elf throughout 2019 so far. We're up 120% on this stock. What we have left, our current value, is just over $20,000, and we own 1,250 shares of Elf. Our cost based on this one, at least as far as the remaining shares, are $7.28. And that one's definitely our shining star, because that one we got involved with, I think it was around February, March, sometime around then. And to be up 120% and already cashed in 5 figures plus of profits on that stock throughout the year, that's our shining star of all the shining stars right there, okay? Next one up here, this one is actually our biggest investment in this account. It's actually my biggest investment in all my different accounts if you add up, what I have in different stocks out there. And that is Facebook, okay? It's definitely a stock I feel very comfortable with. Ticker symbol FB on this one. Huge opportunity in front of themselves to continue to bring in more and more big companies as advertisers. Advertiser rates will continue to climb for the company, and that is phenomenal for them, okay? As far as total gain loss in the stock, we're up $12,657.50. As far as the percent gain, we're up 22.25%. Man, you know how I love twos. I wish it could have been 22.22%, okay? Current value on this one, a little under $70,000, $69,500. $151 on this one. We own 371 shares, cost base on this one of $153.35 there on Facebook. Definitely a stock I feel very comfortable with. As far as, you know, who could displace them, there was like Snapchat was coming a few years back, and it was like, oh man, that might be coming after like Instagram, but then Snapchat's growth like slowed in a massive way. Facebook fought them off pretty good, and then Snapchat also had some mistakes they made over there. So definitely a stock I feel very comfortable holding. And then even if we ever had a recession scenario, I think this is a company that would really thrive, because basically what happens when you have a recession, right? What do businesses do? Businesses downsize and then they start cutting marketing spend, okay? Now, if companies start cutting marketing spend, a lot of these companies are still spending marketing dollars that are not being placed in the best places possible, okay? So what would end up happening is a company like Facebook could actually thrive in that environment, because let's say you have a marketing budget for this company of $25 million and it gets cut to $5 million. Now you need to make that $5 million go as far as possible, right? And so you're going to look at Instagram, Facebook, because those are really the best platforms to get the best bang for your buck, rather than some of the traditional things a lot of these companies might have been doing. So Facebook, definitely a company I feel very comfortable having as my biggest investment, all right? Next one up here is Fizzy Get Dizzy, National Beverage Corporation, all right? We are up $3,246.23 on this stock to be exact. We're up about 12.75% as far as a percent on this stock. Current value on this one is $28,712.70. We own 610 shares of this one, and our cost basis is $41.75. So we were able to build a pretty good position in that stock, and that's actually not a regular paying dividend stock. So it is technically a dividend stock, but usually they pay out once a year. Usually it's around like November and December if you look at like their dividend, you know, past history and whatnot. So we should get some good dividends from that stock over time, but I believe we'll get good share price gains over in future years. And I love holding drink companies. One of our most successful investments we ever had was Monster back in the day, when Monster was a huge growing brand. I don't know if this one will do as well as Monster did for us, but it's off to a decent start so far, okay? Next one up here is Irobot, ticker symbol IRBT. You guys might know Irobot. They make the Roomba vacuum cleaner, and they have more future little robots that are supposed to clean your house and do different things like that. They even have a lawn cutting one coming in the future, okay? I don't know if that one will do big numbers, but intriguing product, all right? This one's one of our newest investments. It might actually be technically our newest investment in this account, but it's off to a pretty decent start for us. We're up $758 so far in the stock. We're up 6.86% as far as a percentage. Our current value on this one's $11,818. We own 180 shares of this one, and cost basis on $61.45 for Irobot. Irobot's a stock that's got caught up into the trade war because a lot of their vacuums, the Roombas and whatnot, are assembled in China. Their tariffs have hit them, 25% tariff. Irobot has to eat that, so it's definitely something that's hurt their business here in the short term. That's why the stock went from like $120 something stock to like recently it was in the low 60s, and I had to say, I'm ready to start buying a little bit of this stock, and if it ever drops below the 60s, I'll continue to add to that position over time, okay? Next one up here is ticker symbol JWN. It's Nordstrom Corporation. They are a retailer really catering to the high end of the market, top 10% of income earners out there, top 10% of the wealthy. A lot of designer names and things like that is what they sell, okay? Nordstrom, we're up about $1,191 on this particular stock. By the way, this is really a dividend investing focused stock here with JWN. We're getting good gains on it. We're up over 10% on it, 10.25%, but really it's a dividend stock. I mean, when we bought this stock, I think it was yielding something like a 6 or 7% yield. Something really high was what Nordstrom was yielding when we started buying it. And even today, even though it's up 10+%, it still is an amazing dividend yielding stock. Current value on this one is $12,809. We own 370 shares of this stock. $31.40 is our cost basis here on Nordstrom. And the only thing that makes me happier than actually receiving those dividend payments from Nordstrom is when you guys smash that thumbs up button, okay? Let's get in this next one. It is Skyworks Solutions. This is one of our biggest positions in this particular account. I think it's our second biggest position in total. SWKS is the ticker symbol on this one. Skyworks Solutions has an unbelievable opportunity in front of themselves with 5G revolution that's about to take off here over the next few years. And so far we're doing pretty decent on this one. We are $4,306.68 on this stock. We are up 8.6% 0.75%. $53,514.50 is what we have in the stock as far as what the current value is. And then we own 650 shares, $75.70 is the cost basis on this particular stock. And like I said, with Skyworks Solutions, definitely not a stock I'm planning on getting out of anytime soon. They already have an unbelievable business. Like if you just look at a teardown of most electronics products out there, good chance Skyworks Solutions in there, especially if we're talking smartphones. Almost everybody's a customer of theirs, and they have an unbelievable opportunity in front of themselves with 5G coming out to expand their business, expand their content in these type of customers. So definitely a stock I really love. Okay, next one up here, this one's more of a dividend investing focus slash value investing focus stock here. It's TPR, ticker symbol TPR, which is Tapestry Company. Now if you don't know what they do, basically they own some great brands. They own the Coach brand, they own the Kate Spade brand, and they also own a brand called Stuart Weitzman, which makes very expensive high heels and different shoe products like that, kind of more luxury items. And so they own those three businesses, and this is a newer investment to this account, and it's doing absolutely amazing for us. So we're up $2,429 on the stock as of right now. We're up 27% plus on the stock, and this is a stock we've owned for, oh my gosh, probably a month, maybe even less than a month. Like it hasn't been like that long we've owned this stock, I know that, and it's just doing ridiculous. Like 27% gain in such a short amount of time. Like you go Tapestry, we are a fan of you. And by the way, it's a great dividend stock. I mean, I think it pays like a 7% yield or something insanely high, at least when we bought it. Current value on this one is $11,383. We have 445 shares of Tapestry, and $20.12 is our cost basis there. Once again, not a stock that we were even planning on getting like great gains in, really just a dividend play, great brand there, good management team and things like that, pretty good balance sheet. And I looked at the dividend yield, like it was yielding, I think 7% or something like that, maybe even higher than 7% when we initially bought in that stock. And their payout ratio was fair. And the more and more I looked at this business, I said, I have to buy this as a dividend play. And needless to say, not only are we going to make a lot of dividend money from that, but it looks like we're going to make some great stock gains. Okay, next one up here is, oh, you guys love this one. It's good old Tesla Corporation. Hello, Mr. Elon Musk, if you're watching this video. Ticker symbol TSLA on this one. We're up about 8% on this stock. We're up $2,749. As far as current value on this stock is $36,880 is what our shares in this particular account are worth. We have 150 shares in total, and our cost base in this account is $227.54. I mean, guys, if you've been following this channel for any amount of time at all, you know how ridiculously bullish I am on Tesla stock for the long term. Definitely not a stock I plan on selling anytime soon. I'm not even going to cover it because I feel like I've covered it a million times, but I think that's going to be, if I had to guess what is going to be the best performing stock for us 5 years from now, over the next 5 years, I would guess it would be Tesla. We'll see what happens, but I think it'll be Tesla. Okay, next one up here is good old Winning Resorts. All right, ticker symbol WYNN. Wynn Resorts, I mean, they operate unbelievably fancy resorts that are gambling joints at the end of the day, but very glorified ones in Vegas and Macau, and now they actually even have one right outside of Boston. All right, and so Wynn Resorts, we're up about 7%, just over 7% on those shares there. Current value on this one is $14,400. We own 123 shares of Wynn Resorts, and as far as our cost basis goes on this one, $109.35. Now, in terms of Wynn Resorts, another stock that's been caught up in the whole trade situation, tariffs, and all those sorts of things. Tariffs doesn't really hurt them, but what does hurt them is, if the Chinese economy dips, that's not good for Macau numbers. Also, there was those protests that was going on in Hong Kong. Hong Kong's right outside of Macau. That's a negative thing for business for Macau. So short-term things there, great long-term company, okay? Very well run. And so the question is, how much is this account up in total and as a percent, okay? And let's go ahead and look at that now. $57,146.63 to be exact is what our total gain is on this stock. As of right now, at least, we are green on all these stocks. If any of them dip and they were to go red, I'd probably start buying them and lowering cost basis if that did happen. We're up over 20% in total, and keep in mind that doesn't even account for dividends received or profits already taken in this account. Okay, so you could add at least 1 to 2% on top of that, if not more than that. Needless to say, even on the positions we are in right now, we're up over 20%, which is, that's kind of my goal at least every year. I try to aim at least for 20% plus. so it doesn't mean it's always possible, but at least, you know, if I'm setting a goal, that's what I'm trying to go after. So hope you guys enjoyed today's video of me disclosing all this information. Make sure you smash the thumbs up button. Oh my goodness, I'm losing my voice. This must be like a 20-minute video, because I know when usually it hits about 20 minutes, that's when I start losing my voice, guys, and I start needing some water, all right? If you're interested in joining my private stock market membership group, go ahead and click the link down there in the description and check that out. If you ever have any questions that aren't answered on the sales page and whatnot, go ahead and DM me in my Instagram, which I'm probably showing you right here, all right? Thank you for watching and have a great day.